How's it going, guys? This is Forensic Forex with Deontay, and this is Forex Friday. I know we had a long hiatus. Technically, it's not Friday. This is Sunday that I'm doing this pre-recording. But as we go along into the rest of the year, summer's soon coming to an end, going into the fall. I have a lot more time. Normally during grow season, for those that don't know, I do own a farm, and it's a lot of work and a lot of time. So I'd be tired, and sometimes I can't do the things that I normally do with the channel, but I am trying to figure out a way to schedule things in and get that Discord channel going, get mentorship going again, and to provide value for those that are supporting the channel, whether that's on YouTube, TradingView, Telegram, or wherever else you find me. I really am appreciative of all the support, the questions, the comments, and the engagement. With that being said, Forex Fridays is going to help you with market breakdown, finding crucial entries, right? We're going to sharpen those skills on how to find like one shot, one kill setups and other topics like high time frame trading, swing trading, how to get into trending environments, how to find trending environments, and so many more things to talk about. Before we get into today's lesson, a little disclaimer. At Forensic Forex, we want to remind you that trading in the financial market carries a high level of risk and may not be suitable for all investors. Please make sure you fully understand the risks involved before making any trading decisions. Everything shared here is for educational purposes only and should be considered advice, not financial advice, but simply advice in the market. Hopefully you found this insightful. Let's transition into our weekly range review. So every Forex Friday, the first topic is going to be the weekly range review. And it's going to look just like this. We'll always be implementing the DXY or dollar index. We'll talk about one fun pair, and then we'll talk about one major. And we'll go through all of those pairs or indexes and where there are the best opportunities or the greatest opportunities of that week that just passed. So, for example, just looking at the chart, right? If we took off everything here, it looks like not much, right? We don't have really any structure. You see the market honestly is in the downtrend, it retraces a little bit, goes down, and then it's kind of moving sideways. But when we start to put things on and layer and paint the chart, it starts to make a lot more sense. So when I put this on, we can see this is Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. Now, ideally, the days that I'm looking to trade are going to be Tuesday, Wednesday, Thursday. Sometimes I would find a Friday setup. Sometimes early in the week, there might be a Monday setup. But ideally, I prefer, right, this is my preference, to find a trade setup on Tuesday, Wednesday, and Thursday. Now, looking at this chart, you can see I have a line on the chart. This is the opening price to the weekly candle, that new week. This is going to be your natural indicator to overbought and oversold. More simply said, premium or discount. Now, when you're looking at these setups, I want you to take in mind where these setups are forming and how they're forming and what time of day they're forming. You can see we have the New York model for Thursday and we have a London model for Friday. Right? I mean, and we'll get into what NE stands for as well. But take a look at what the market is doing around Thursday. The market goes down sharply and then goes rallying up into Friday. I want you to see how the best buying opportunities, if you simply just wait and allow markets to go along their own natural journey instead of forcing ideas or forcing a speculation, you will get a lot more setups that are less resistant to what you're speculating. So, for example, let's break down Thursday's New York model. So let's go back to just before 7 a.m. We're going to drop down to the 15-minute chart. And I want you to keep in mind as we go along and we bring back this series, you're going to see that there are time periods where you should not be trading at all. And one of those time periods that you shouldn't be trading is 5 to 7 a.m. I do not like to trade this time zone. Why? Oftentimes I'm met with consolidation. It's a very statistical thing. It happens. It's very frequent in the market. It's a phenomenon that we all can see. And as we go along and you study the material, 5 to 7 a.m., just isn't your friend as a trader. But from 7 all the way to 10, and that's where we're going to strike, right? We all know that as the ICT kill zone or the New York session. There's an overlap, of course, with the London, but mainly between 7 to 10, the volume is high. Markets are gyrating. They're moving very fast. Now, how we're going to frame the New York model is very crucial, but it's very simple. Follow along. So we take 5 to 7 a.m. We're going to find any swing lows or swing highs that are left open or are unbroken. This I'm marking off as the lowest low of the session. It's going to be included as some type of sell side. That low, that candle low here at 5. This swing high, even if it wasn't a swing high or was the highest high, we would use it as a liquidity pool. Happens to be a swing high. So we use that. We can't take this swing high. Why can't we use this swing high, Deontay? Because it's already been broken prior to 7 a.m. So we can't use that one. There's another one here. I see there's sell side liquidity pool here. And that's a swing low. We'll make that blue. I like to color code my things, right? Blue are for my lows, red is for my highs. After that, we want to take it a step further. We want to look at the opening price of that kill zone. The same way we have an opening price, it's a very fractal idea for the weekly candle. There's an opening price for the actual kill zone. Now you have your premium and discount levels are overbought or oversold. After that, we also want to look into where are we compared to the weekly opening price. Are we below it or are we above it? Right now, you can see where price action is. We are well below it. That's the Sunday's or weekly opening price, the start of the week. We're well below it. That's awesome. That's amazing. Right? I love to see that. So we can see we're already in an oversold condition. It's a deep discount. We're below the weekly candle, and now we're below 7 a.m.'s opening price. Currently, where it's at, where I have it paused at. But if we're going to think about where the ideal scenarios form, ideally, what do you want to buy below the weekly open? Whether that's long-term or short-term, isn't it ideal to buy cheaper? Absolutely. So we're going to use that as our crutch or our gauge to whether we should be a buyer or a seller. Now, we're not talking about bias here. Let's make that clear. We didn't talk about the daily chart, the weekly chart, the monthly chart, the seasonal tendencies, the macro, the interest rate differentials between the central banks. We didn't refer to any of that. This is why I'm keeping it very simple for folks to understand that the market doesn't have to be multi-layered. It can be very simple. It doesn't have to be highly optimized to have great results. At this point, all we're simply looking for is the market to raid sell side. Why would I want it to raid sell side? Because I know if it raids sell side, there's a chance for it to go long and find counter liquidity pools. So let's play it forward. See what happens. Play it forward, and then bang. You see that? Price takes out that sell side liquidity pool. At that point of it taking out that sell side liquidity pool, what I'm looking to do is go counter to that because I already know I'm below New York opening price or 7 a.m. We took out one level. All it needs is just one level. It doesn't have to take out all the levels, but you can see it does here. But when it takes out that level there on that 15-minute candle, you need to be stalking an entry on the lower time frame. Now, many folks may prefer the 5, the 3, the 2, or maybe the 1. Me, Deontay, I like to go down to the 1 minute. I truly believe you can execute trades on a 1 minute time frame. No matter the experience or the skill set, if you follow these steps, you will see this phenomenon repeat over and over. It's not an everyday thing. It's not an every single pair thing, but it is something that you'll see consistently throughout the week. So as soon as that 15-minute low is rated, we need to go down to a lower time frame and stalk an entry setup. And I will show you the exact entry that I'm looking for. It's a specific sequence. So you can see it takes that out. That's that 15-minute sell side liquidity pool. And then you have that 15-minute swing high or that buy side liquidity pool. And there's still money up here. And we know that money may get taken out. Those stops. Anybody that was selling has a stop loss here. Odds are. That's how we're looking at it, right? This is going to be a target. But how do we get there? How do we find something that's going to pivot us towards that direction? Well, I'll show you. And you need to be patient. Sometimes the entry forms very early in the session. Sometimes it forms very late in the session. Sometimes it forms right in the middle of the session. All I can tell you is you need to be attentive. You need to have that time to sit there between 7 to 10. If you don't have the time to sit there, then maybe the New York kill zone is not your preferred session because it interferes with your schedule. Keep that in mind. You can't force things if your schedule doesn't allow you to trade that kill zone. You have, what is that? 4 of the kill zones to trade. You got Asian, you got London, and you got London close. Correction, 3. 3 other kill zones you can trade. And there's also models for that as well. Let's play it forward. Now, what I'm simply waiting for is a fair value gap to run through a swing high. And there it is. Look, I already showed it so fast. Look how we got to the buy side. I want you to see this here. It's not just any fair value gap that I'm taking. Now, many folks may say, oh, but there's other PDA that I see here. And there's other market structure that I see here. I understand that. I see it as well. But I'm trying to keep it in layman's terms for any level of trader, especially the beginning trader. This inefficiency, this fair value gap, this speed, right? It's speed in one direction. It's simple, right? It's fair value gap, speed. It's speed going in one direction. It's delivered to one side the entire time, to the upside here. I want to see a swing high inside that. It has to be inside. It can't be on the end of the fair value gap or the starting point of the fair value gap. It needs to be in between those 2 points. And you can see here, that swing high clearly has speed running through it. Great. This is where we're going to take the entry at the top of that fair value gap, the premium side, not the discount side, not the mean threshold or the 50% or the fair value side of this inefficiency. We're taking it the very touch, right? Institutional order flow entry drill. As soon as it touches that fair value gap, that's where we're going along, the top of that fair value gap. So if we were to take a trade on DXY, I know some brokers allow you or some props allow you to trade the DXY, and we're going to simply just go for 15 pips here, a 1-to-1. That's my classic intraday setup for me. I'm only looking for 15 pips. Now, if it was gold, I would kind of decrease that. I'll probably just say 5 pips, 5 to 10 pips, right? A 1-to-1 scenario, 10 pip stop loss, 10 pip TP. Now, as soon as price hits the top of that fair value gap, follow me. That's where we're going to go long. Goes in and it runs straight up. You see how it takes out that buy side? It gets there. So it purged sell side liquidity pools via 15-minute chart, via dead zone, right? This zone that I don't trade. I'm calling it a dead zone because I personally don't think it's lively, right? It's not saying there isn't opportunities there, right? Opportunities are obviously endless, but doesn't mean you're going to get one. But the market itself is strategically going to go into certain phases during certain times of day, and this is a time of day you just shouldn't be trading. And this price action just takes off. Amazing trade. And this is the DXY. Notice where the entry is forming. Where's the entry? Is the entry forming in a premium or is the entry forming in a discount? The entry is clearly forming in a discount. The ideal buy scenarios will always form in a cheaper price action. Now, sometimes it's offered for a long time. Sometimes it's offered for a short time. Here, you can see it was offered very shortly. It was brief. If you didn't get that entry on that fair value gap, there was no chance of you getting a better entry to go long on DXY. Apologize. I'm trying to plug in my laptop here before it dies. There was no opportunity for traders to catch this again. Once it formed, and it's done. Sometimes it might give you a couple of retests, maybe 2-3 times, but once it's ready to move, it's ready to move. And you can see how clean this setup is. Take a snapshot of this, right? I want you to print this on your frontal lobe. Do not forget about how this looks. Sometimes it looks a little differently, but this is the overall premise. This is the main idea to how Deontay trades the kill zones. Do not forget how this looks, because this is a classic buy model here. for the New York session. Take out sell side liquidity pool, print some type of inefficiency, and allow price to run higher. We get traders on the wrong side. We get traders, any breakout traders, to go short. Instead, the market says what? Well, breakout traders, you're actually wrong. You're going to place your stop loss above highs. We're going to turn around and run through your stops. Thank you for being liquidity to sponsor those longs. And this is the simplest model that I've found over the years to be very helpful for new traders because it's a systematic approach. Step one, frame off your buy side and sell side liquidity pool between 5 to 7. Wait for one side of the market to be rated. On top of that, it's contingent to where you are on the weekly range. Are you above the weekly open or below it? You see that we are well below it. Look at where we are. Where's that weekly opening price again? It's over there. See? That's the line right there. We're well below it. That means this setup was more ideal. And it was perfect. Then we add a double confluence on top of it. Do we drop below the New York opening price? Yes, we do. Now here we don't drop below midnight's opening price, which is over here. Where's that candle? Right around here. I think that's the open. I don't know if that's an up or down candle. I'm assuming it's a up candle. Nice. That opening price is here. That's midnight opening price. Let's write that out. MOP. It's an acronym. 12 a.m. Right? That's the IPDA true day open for the new trading day. Price here is above it. It's in a premium. But it checks out 2 out of the 3 boxes for where you should be looking for longs. Below the kill zone's opening price and below the weekly opening price. It would have been even more pristine, right? And more pinnacle if it was below. If this entry and everything was down below midnight as well. All 3 in a line. That's basically where we're going to be looking for that one shot, one kill. Or those environments of one shot, one kill starts to show itself. Now, I'm not saying one shot, one kill will last you, 200, 500, 600 pips. Sometimes it will, right? You stay consistent. You'll find yourselves where those trade setups will hit for longer than you want it to. And that here is last week's, right? This is July 24th. This is last week's Thursday New York model for the DXY. Pretty cool, right? That was nice. Let's get rid of this. Now let's move on to the next example, which is going to be our Friday example. So our Friday example, let's play it forward, is a London model. Now, I personally don't trade London because I live in New York. At this time, I should be sleeping, but there will be times where I do stay up, right? I'm an owl, night owl sometimes. I'm very active, or I tend to get a lot of work done later at night. And if you find me up, you'll see me posting a lot in the Telegram channel and updating you guys on setups. London model is the same thing, just a different time. So what we're taking here, we're actually going to take midnight to 2 a.m. So play it out to 2 a.m. This is another dead zone you shouldn't be looking to trade. You should not be looking to trade here because the phase of the market out of the 4 you're going to be met with, odds are it's going to roll on the dice and land on consolidation or some type of accumulation, sideways price action. We're going to do the same exact thing. We're going to take the buy side and sell side that we find within between midnight to 2 a.m. And I like to call this the Asian lunch because it happens after the Asian session. So we got this buy side liquidity pool, right? It's very simple how we're framing the buy side liquidity pool because we're framing it inside a time section, a segment, right? And then we're also looking for swing highs and swing lows, or the highest high or lowest low. This will be a swing low. I will count that as a swing low. Why? Because it still lands on that 2 a.m., thinking like we're still in New York. That 2 a.m. threshold between still on that New York session idea, from midnight to 2. So we'll count this as our swing low. 1, 2, 3. That's the lowest low between 3 amigos, right? 3 bars, 3 candles. That's the swing low. So we got our sell side. We got our buy side. What is that? That's buy side liquidity pool here. That's sell side liquidity pool here. Great. Now we take a next step and we open up the kill zone's opening price at 2 a.m. So this is going to be our London. Let me write it all the way out. London opening price. And the same ideology stands true here. Premium is above, discount is below. We want to be looking for buys below London opening price. If that is what is your speculation and you want the market to more likely give you a buy setup, you need to be looking to buy below London opening price. But I wouldn't force it. Let the market naturally do what it has to do. I'm looking for a break and change in trend, right? A turtle soup idea. You'll see that I'm very known for just looking for turtle soup. I'm mainly a turtle soup trader. You'll hardly see me looking for breakout continuations. Sometimes it's warranted, but it's not. Again, we're not going to highly optimize the idea. We're keeping it very simple. Let's play it forward and see what happens. Naturally, just allow the market to do what it wants to do. Takes out sell side. So right on that candle there, you need to change time frames. You go from the 15 to 1 minute. You need to stalk your prey now. You're looking for that entry. And that entry is going to be the exact same thing. Now, I know there might be other structure and PDA arrays that you see. It does coincide with it. It does align with that. But I'm trying to keep it in layman's term for the average trader that's going to come to the channel. Right? That's my target audience. I'm looking for people that are new to trading and they need help to get in a zone quickly without being too consumed in a lot of other details. Let's play it forward. Again, what are we looking for? A fair value gap that runs through a swing high. Now, technically, I'm going to show you this here. This is one right here. That is a volume imbalance here to here. Right? There's some type of inefficiency here. Now, it's not a fair value gap. It's not speed in what we would normally see like this, right? But there is a inefficiency here. I would prefer, instead of going for the volume imbalance, I'll look for a fair value gap. Let's play it forward. We'll keep it on the chart just to show you here. You see this here, here, and here. This is the entry. Partially, some of this fair value gap is on 7 a.m. A little bit of it, it's above in a premium. 7 a.m., 2 a.m. That would mean I would want price action to get below in this fair value gap, below the line. It needs to be below this line because I really want that discount buy. Let's play it forward. See how price comes down into it. It comes down into that. And now that's where we look to go long. So this long idea will mainly just be happening at the opening price, close to fair value or a pip below fair value. And when I'm saying fair value, I'm just meaning the opening price, the starting bid. And that's where we'll be looking to go long. So the idea would look like this. Something along the lines like that. We're looking for a 1-to-1. I don't trade the DXY. I know there might be some folks that do, but I don't. Play it out. Bang. We get to what? That buy side. We get to that buy side. It takes out that sell side. Purge. And then what happens? It reverts back to that target. Bingo. TP hit. Amazing trade idea. That was fantastic. Now, let's move on to another pair. And again, this looks exactly like how Thursday was forming, right? Again, take this, screenshot it, put it in your frontal lobe. You need to memorize this. Right? You need to understand this is what it's generally going to look like. This is what you want to see. This is the success that you're looking for. This is the price action you want to see. Cool. Let's move on to another pair. Now, the DXY, again, is always going to be a staple in the weekly range review. Let's move on to another pair. Something probably like a major. Now, we'll do one major and then do something fun. Let's go back to the hourly. Let's play this all the way through. And as we can see, price was trading up. I like to take this off the chart just to show you what happened, right? The day progression: Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. Look at how it drops below the weekly opening price, just below. Sunday was technically the low. Sunday and Monday technically the same day, so you could call it Monday, but when you break it down like this, Sunday made the low of the week, and Thursday made the high of the week. Two opposite ends. But notice where they brought price below the weekly opening price. And they gave traders little to no opportunity or a lot of time to catch cheap buys to get up here. Little to no opportunity. Which doesn't mean you can't trade. Just because the market's bullish doesn't mean you can't find sell setups in that idea. In a weekly candle, there are sell setups. There's counter trend ideas. Even if the market on a higher time frame is bullish for EU, doesn't mean there's not short-term ideas to go short. And if we can frame it properly and risk properly, that's the biggest part, managing the risk, we will be okay. Let's take a look at Wednesday London model. Let's bring it back to 2. So we got midnight, and we got, where is it at? 2 a.m. Cool. Let's bring this back. Now, many folks might say, oh, you didn't talk about the midnight opening price in the last DXY example. Great, let's talk about it here, okay? We have the midnight opening price. This is a start, after 2-day open, midnight opening price, MOP. Then we have 2 a.m.'s opening price. We'll just go LOP, London's opening price. Keep it simple. And then we got 5 a.m. Where are we in reference to the weekly opening price? We are well above it. Well above the weekly opening price. Okay? So what's the thought process? Ideally, shorts would be preferred. And we're not basing it off of what price action we see on the left of the chart or what higher time frame IPDA rays we're going into. Just a very natural thing. We can see it's overbought on the weekly candle. It's up there really high. So could there be a short opportunity? Yes. Is it always going to be guaranteed? No. But we are going to always show the ones that were very successful. So we can just get straight down to the nitty gritty and not waste any time. Frame out your liquidity pools. How? Just find your swings. This is sell side. You know, we're going to make it blue, right? You knew that was coming. I knew you guys knew that was coming. What we got here? We got buy side. Right? 1, 2, 3. That's the highest point between 3 candles. Buy side is ran right at 2 a.m. Great. We also have buy side here. We'll just label it anyways, even though that was the closest one. You don't have to label them all, but you can label the closest swing low or swing high that price is probably trading within or consolidating in between, and wait for that side to be broken. You don't have to label all of them, but it'll be nice to label all of them because you'll see how price action does react around these levels sometimes. Now that price ran that buy side liquidity pool, what can we look for? We're going to look for that entry to go short. Let's go on the 1 minute chart. And now we stalk and we wait. We don't force it. We don't immediately, as it breaks that high, we don't immediately press sell order. You may get lucky once in a while, but that's not how we're going to do it. We're going to wait for the entry. Regardless if we miss it or not, we're going to wait for that entry. Let's play it a little faster. Price comes up even further. Now, while it's going up, right, and taking out these other levels of buy stops, it hasn't printed the entry. So we're not doing anything. We're absolutely not pressing a thing. We're not looking for a trade at all. We're still going to keep waiting. This looks like the idea. I want you to take a look. Looks like the idea, unless I'm correct. Yeah, see, you got to be very specific in looking at it. That is a swing low. Look at the lows. Low here, low. If I'm correct. No, it's not actually. I'm looking at the close. So the lows here are the same. This is a double bottom. So this technically isn't the entry either. It looks like it, but it's not because this is a double bottom. This doesn't warrant it for me. I wouldn't take this. Some folks may say, hey, Deontay, I disagree with you. I'm going to take it. So be it. But this is the way I trade, okay? It's my channel. I get to show you how I want to teach. Let's play it forward. We're still waiting patiently. Patiently, still waiting, nothing, and all of a sudden now we got something. Where do we have something? We have it right here. Love the replay tool. Large inefficiency or large speed down. Where's that swing low? Inside the speed. Perfect. It's not at the start. It's not at the end. It's right in between the 2 points. And this is where we're looking to go short. That first touch into the discount side of that fair value gap, or that speed to the downside. So when price touches that low, correction, that high, we're looking to go short. Now you get fancy with it. I wouldn't get fancy, right? Some people might say I want to go short here, risk a 0.5% or 1/4%, go short here in the mean threshold of it, or the equilibrium of it, or the 50% of it, tomato, or go short here at the premium side. You could do that because there are times where you might get into full drawdown and you could potentially get higher entries. But the first entry is right here. Now, when you look at this entry, where is this entry forming? It's forming where? Look at this. Above midnight opening price and above London opening price. And if you scroll down, let's not forget the honorable mention, the weekly opening price is down here. So we have a triple confluent sell idea. This is where we start getting into more of that one shot, one kill territory without overcomplicating the idea. Okay? We go short there and we hold. Play it out. We get the entry. We're in some drawdown. Back into the entry, drawdown again, back into profit. The session ends. Crucial point, we're taking the entry during the kill zone. We're not taking the entry outside the kill zone. So let's say this entry wasn't triggered. Right? These are some questions that we may get. Let's say this entry was never triggered during 2 to 5, but outside of 5 a.m., it gets hit. Somewhere along the lines here, it gets hit. I'm not taking it. If the session ends without us getting that trigger, that trade is no longer existing in my brain. I let it go. Set it free. I'm not going to even worry about it. Now, there are times where the entry does occur or gets triggered outside the kill zone. It does produce a great setup too. But I like to keep the rules very strict, keep it simple. Don't take the trade setup, wait for another kill zone, do the same thing, rinse and repeat. Let's go on the 5-minute chart just to speed this up, and then TP hit. Let's go back to the 1 minute now. And as you can see, look at that. This is the exact setup we just talked about, but inverse. We have some type of consolidation. We raid one side of the market. We wait for an entry to print. The entry prints, and it goes short. Again, I know there's other PDAs in here. BPR. There's a breaker. There might be a mitigation there, right? There might be a volume imbalance. There might be a gap. There might even be a rejection block. I understand. But this is what my eyes see. And this is what I'm going to keep producing and bringing to the community over and over again because I see the results. The entry is pretty quality, if you have to ask me. Based on the idea, it's pretty quality. Again, we're selling above midnight, we're selling above London, and we're surely selling above the weekly opening price. I don't think it gets any more pinnacle than that without overcomplicating it. It's a great trade setup. Fantastic. Print this in your frontal lobe. Take a snapshot, screenshot it, print it, frame it, and don't you forget it. That was nice. Take one side of the market, go back to the other side. That was fantastic. Love trades like that. And when does that happen? That happens on a Wednesday, an ideal trading day, right? Tuesday, Wednesday, Thursday. Sometimes it will be a Friday setup. I preferably don't like it. I don't like Friday setups, but there will be Friday setups. And that was the London model. Let's take a look at the Friday one. Stop. We're going to label that out here to here. And you start to see how slowly we're going to get systematic about it. No bias, just simply going with what the market is going to give me. Let's bring it back just at 2 a.m. So 2 a.m. starts, and I like when the scenarios like this because people ask me, what should I do here? And you'll see why, because many of you might be looking at the chart, because I know you guys are smart and inquisitive, and you're here on this channel. Right? All my subscribers are very smart. This swing high was already rated prior to 7 a.m. It was rated on this. I always keep going back to New York. Prior to 2 a.m. or London Open, right? At 1:45, this 15-minute candle raised that swing high. So we can't use that swing high. So what do? I take the highest high that we get at the start of the kill zone or at the end of that dead zone. And let's see. It is also a swing high too. So that works out as well. Perfect. That's the opening price for London. LOP. Where is midnight opening price at? Let's find it. Oh, there you are. Okay, midnight opening price. MOP. MOP. Great. Let's see what happens now. Let's play it forward. Uh-oh. Price runs out. Buy side liquidity pool. Should we panic? No, we shouldn't panic. We go down to the lower time frame and we keep it nice and smooth. We keep it simple. You see a rated structure up to the upside. Could we potentially get back down to these sell side liquidity pools? Yes, we can. There's definitely an opportunity for price to come out here. What we're seeing on the 1 minute, you can see it's equal lows. And again, consolidation. This didn't really do too much. It really didn't. It didn't trend super high. It didn't trend super low. It was pretty range bound. And now we get that volume kicking in during that session. We also got news. News is an excuse to move price action faster, in my opinion. Doesn't matter. The market's still going to print what it has to print. Now, I'm not sure how other folks may take it, but I personally think the news is the excuse. It's just the excuse to move price action a lot faster, to accelerate price action. It can also be used in my ideology, to get traders on the wrong side of the market, right? Print large candles, entice them for a breakout. They chase the breakout, and then they fade it on you. And you're like, dang, I thought I got it right. The news was pumping it to the upside. Now, all of a sudden, it's fading. Or the news was dropping it to the downside, and now it's accumulating and going higher and distributing up higher. Yeah. Play it forward. So we got a break on buy side. And let's see if we get an entry idea. I see the entry. And as you get familiar with it, you start to pick up speed. Look at that. 1, 2, 3. That's that swing low. What should we do here? We go short. Bottom side of that fair value gap. The discount side of that fair value gap. And we're going to simply wait to see if we get a fill. If we don't get the fill, we don't get the fill. What more is there to do? Sit there, wait. You don't get the shot, you don't take the shot. We got the fill. Great. We got the fill. Let's see if it continues to sell off. There will be drawdown. Not all your entries will be perfect. It's not going to be perfecto. Some of your entries will have some drawdown. You'll be down 10 pips. You'll be down 20 pips, depending on what your parameters are. I'm doing 15 for 15, just to show you here briefly. Look at that. Measure that up. 15. It should be 15. I'm not sure why. Am I measuring wrong? I think I'm measuring wrong. Should be 15. Oh, that's strange. That is very strange. Not sure why it's not 15 pips, even though I set it to 15 pips. It's giving me 14 vibes. What the heck? But nevertheless, let's continue. Like, this is music to my ears. Like, man, that is beauty, man. That is beautiful. Triple confluence, one shot, one kill territory. Friday, end of the week. Wow. Amazing. It's above London's kill zone, it's above midnight opening price, and it surely is above the weekly opening price. Look at that successful trade. Did you have to do a lot of thinking about it? No, you just naturally took what the market did and followed it instinctively, right? Price went up, rated buy side, you look to see what sell side it could target, and you find the entry, you take the shot. Fantastic. Screenshot it, screenshot it, screenshot it. Drill it into your head that you have to look for the buy side and the sell side prior to the kill zone. Use that to help you. Again, we did have news, right? Again, we did have news at 4 a.m. Was that correct, right? We had news at 4 a.m. What news was this? Was it? It says red folder. IFO business climate. Now, I don't know how impactful that is on the market itself. Sometimes they'll say a high red folder, and it doesn't actually really move the market. Like the market sentiment or the market's fundamentals are not based or focused on this data. But I know certain news events, if the fundamentals don't change too much, that news event will fundamentally really move that FX pair a lot. And even with that news, like boom, 4 a.m. wasn't not a lot of volume on that news release. You can see it clearly wasn't super impactful, regardless of it being red. And bang, oh my gosh, amazing. Let's move on to gold. Gold. This new trading week is packed. I'm telling you guys, it's packed. Be safe, be safe, be safe. All right. Monday, Tuesday, and Thursday. So we got 2 ideal trading days we got here, and it's a little different. Normally for the Forex Friday videos, we normally left the Asian model out, but we'll be including that here moving forward because I want to bring more value to my subscribers. Again, I really do appreciate you guys. Let's jump into Monday and just take a look at the natural price action around the weekly opening price. There was a cheap buy at the beginning, very beginning, straight up to Tuesday. Tuesday makes the high, Friday makes the low, opposite range. Monday, London model. We'll walk through this one a little faster, but again, this is happening with gold, this is happening with DXY, this is happening with a lot of asset classes that are tied into the fiat market. 15-minute chart. And the steps are very simple. Let's walk through the steps again. I'm here to help you guys. Like if you ever feel lost, you feel confused, trust and believe we do offer services to help you guys. And there's a lot on the channel itself that's out already. And I best believe if you were to join our Telegram or our Discord, people in the community will definitely help you. Whether or not they get to you right away or they get back to you as soon as possible, later, we will help you out, especially me. I see every message. Trust and believe. People think I don't read the messages, even if I'm not super active or talking in the chat. I'm always monitoring what's being sent in and what's being posted because it's still a safe space. And, some people can join and be party poopers and we got to remove them. We had to do that a couple times in the previous years. But lately, community's been really healthy. And I really do appreciate those that engage in that chat because this is our life. And this is my life, a part of my life. I used to be a full-time trader. Now I'm a part-time trader because I do think I can make a rate of return with a business idea with the farm. Got to have multiple streams of income. You can't just have one main income unless that one main income is beefy. It's a large stack of money. If not, you piece it together, more the merrier. Let's continue. Where are we? Above London. Where are we? Above weekly opening price. Where are we? Above midnight opening price. Are you getting the idea now? Are you getting the context? Are you getting the natural price action structure here? No indicator. Price action is already telling you what you need. It's up to the operator to decide what is happening, right? You got to pick through it a little bit. But if you go in here with no bias and you simply do it the way I'm explaining it to you, I'm telling you, you're going to hit some winners. Let's go down to the 1 minute chart, because what happened? We rated buy side. I do see we have sell side here. I'll mark it off. Fantastic. 1 minute chart. All right. Looking for that entry. It must be a fair value gap. Perfecto. Is this it? Let me look closely. Yes, it is. Look at that. Do you see it? Without the orange box, do you see it? Now it's there. You see where that swing low is? It's not at the end of it. It's just inside the two lines in the box. Perfecto. Love it. We go short here. You can clearly see we get the fill. That's the gold one. Is this the gold one? There we go. Just looking for 5 pips, right? Gold, micro lots. Don't risk as much as you normally do. So people like to get in here and stack a standard, and then all of a sudden gold moves 2 ticks, and they're like, whoa, I'm down 300, 400 bucks. Yes, you are. Let's play it forward. TP hit. Nice. Look at that sequence. Now, I know the kill zone correction. You see that? It was like just running up, 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 up. You will find some days will be like that. I'm not saying every single dead zone that you see will have consolidation, but there will be some inside of it. You can see at the end, there was some. They got traders up, ran it sideways, ran up one more time, and gave a nice little dump. That was nice. That was a good trade setup. And that's gold. Where was that entry forming? This entry again. Above London opening price, above midnight opening price, and what's that? The weekly opening price, the start of the week. That is a triple confluence. We're starting to get into that one shot, one kill idea. Now, this one didn't happen to be that one shot, one kill idea for hundreds of pips, or catching the weekly range expansion, but it caught probably a very small percentage of it. But you'll see these ideas sooner or later will get you that one shot, one kill. On a 15-minute chart. Where are we going to next? We're going to Wednesday, right? I think we're going to Wednesday. Oh, we're going to Tuesday. Asian. This is my favorite kill zone to trade. Why? Simply because I'm available. That's why. It's because I'm the most available around this time. I already went to the farm 2 times, in the morning, early in the morning, in the evening, and then I'm home, relaxing, just got a meal in, finished the workout, and I'm ready to trade. This dead zone, though, is the largest dead zone. It's going to be from 12 p.m. right in the afternoon, New York Eastern Standard Time, all the way to 8 p.m. New York Eastern Standard Time. You see that consolidation? Man, you're telling me the markets aren't rigged? Aren't rigged? All this time it had motion to go up, and then all of a sudden it hits 12 and it does this. You know there's something going on here. Something fishy is going on. So let's frame this out. You can see clearly it ran a buy side. That's all we really need. There was another one here. I know for those that want me to be very crucial to detail, I will be that person for you. Especially if you're going to be in the paid mentorship, detail is going to be important. Important, because I want to provide lots of value for my paid members. This is Asian opening price. AOP. AOP. All right. It rates what? Buy side. Check. Check. Money sign. And then bomb sign. Poof. Stops rated. Target sign. Affirmative. Here. Looking for that low. Price to get back down to that low. We need to find that entry right when it runs that. So let's go back here and let's watch that price action on the 1 minute chart. Where are we in respective to the weekly opening price? Above, again, premium. Where are we in respects to the Asian session's opening price? Above, clearly. And midnight, technically the Asian opening price is a part of the next day's candle. Technically, it's already Wednesday's daily candle forming. But if we had to use Tuesday's midnight opening price, because this Asian session is technically happening during Tuesday night, even though the Wednesday daily candle is already open by 5 or 6 p.m., depending on what you're looking at. I think gold is 6 p.m. You can see we're above midnight opening price too. It's all the way over here, somewhere there. All right, we're way above it. Great. Now let's go see if you can find that entry. Can we? I think we can, because I went through and clearly did my homework and studied it and went, clearly cherry picking for these setups where this does occur. But hindsight is the only way we get exposure to the price actions. It's the only way we reverse engineer these setups. How did it do that? Well, we need to start from where it came from, what's the entry, and what did it do prior to the entry. Do you see? Fair value gap, 1, 2, that's the low, the second candle, 3, that's the swing low. We would have went short right there. Look how it taps into it perfectly. Boom. That's why people always say that institutional order flow entry drill is very crucial, because you'll sit here fumbling, playing around trying to get the trade, and then you don't get it because you thought it was going to go higher into the fair value gap. It doesn't matter. Frame the risk. Got another opportunity, and it sells off, and guess what? It hits sell side. Ta-da! Does that look familiar? Does it? It looks very familiar. Sells off nice. And this is the Asian session. Now this is where we start getting into that one shot, one kill territory. This is what we talked about in the Telegram channel. If you're not in the Telegram channel, get in there. Telegram channel is popping. I need you in there. I love to see you guys in there setting charts, sending chats, showing results, showing profits. I need you guys in there because I'm trying to grow a community of like-minded traders, and we want these traders to be beast. And we play it forward just to see what happens, what continues to happen. This thing continues to break down. And this is just a one-to-one. This is 5 pips, guys. 5 pips. I know the measuring tool was giving me a problem earlier. Let's see. Three, 4, 5. Right on the money. 5 pips. 5 ticks for gold. And that's all you need. Before I was using 15, I figured that it was too much. So I decided to cut it. And this is what I'm going to definitely stick to for my standard one-to-one. Just 5. And call it a done deal. Let's move on now. Again, that was a triple confluence sell. I want you to know. That sell idea. Let's move on to the next sell idea. I'm going to go into Thursday. And notice, look at what gold just did. Let me zoom out. Look at that. That one idea. I think it even got retested again during a dead zone just outside of Wednesday's London session, outside of 5 a.m. Retests that zone one more time and dumps. Oh my God. Good Lord. Have mercy. Thing just drops out of the sky. Just drops. Let's go Thursday. But notice where that sell, again, where's that sell happening? Above the weekly opening price. Fantastic. And stop. Let's see if we get it on the money. Did we get it on the money? We were close. We were close. We thought we were clutch. All right. And then we got 12. So this will be the last example for the weekly range review. Remember, this is all from last week. These are setups from last week based on how Deontay trades the kill zones. 12 to 8 p.m. is your dead zone. Again, look at the consolidation. You can't tell me that's not rigged. And you can't tell me that doesn't happen very often. It happens very often. Okay, look at this chart. What's going to happen? We have no idea. We can't force it. But I would prefer it to run buy side first, right? This is another crucial thing. It needs to run buy side first. It can't run sell side first. If we're in a premium and it runs the sell side first, I'm nixing the whole idea of me looking to go short. It needs to do it perfect the first time. It needs to run up here first, then give the short. It can't do this. I don't want that. Even if it did do that, that's not what I would prefer. It's easier to see price go up here, get those traders in long ski, and then we go short ski. That's it. That's all we're trying to do. So, play it forward. Oh, we got a break on buy side. Fantastic. We love that. We need that. Why do we need that? Because that's what is naturally going to give us the inducement to traders going the wrong way. The Judas swing for the Asian kill zone. Now we go down to the 1 minute chart. We're targeting those swing lows. There was one I wanted to label here. There we go. Can't miss anything. Detail, 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 detail. Value, 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 value. I want people to be good traders. I want people to understand when they come to my channel, you're not going to get nonsense. You're going to get great material that actually is digestible and you're able to understand and comprehend. Okay, I see the entry has already formed right here. Large wick up here. It looks like a rejection block. Yep. Boom. And that's the entry. Sure here. We ain't looking for too much. We ain't looking for too little. And I like how sometimes the parameters line up with where the sell side is. Like, I love that. The way I structured it, chef's kiss. Drawdown is not the end of the world. And TP smacked. Smackski. Just got the TP. Was amazing. Look at where we got that entry. Whoops. Above the Asian opening price. Can't tell me you can't trade gold during Asian session because I'm showing it here. I'm not saying every day, but look, it's Thursday. For those that have been following the channel for a couple years now, you know I preach about Thursday Asian model a lot. Tuesday and Thursday, especially Thursday. Thursday tends to be leading more in towards that one shot, one kill territory. And the fact that we're using the natural overbought and oversold environments, it's pushing it even further, exacerbating it. Let's go on the 15-minute chart. That TP was smacked, and let's play this all the way out to the end. And this thing sells right back down, crossing over the weekly opening price, going into Friday, and going into what we are now because the new weekly candle has already started. But that definitely, like this example, 110% one shot, one kill, and this too. But this setup majority got a big portion of the daily range expansion. Now there was a nice portion here, but the market gave back that portion, and we're able to catch that short on that range expansion. So this was a great one shot, one kill idea. Now that we finished the weekly range review, as always, every week we'll do a weekly range review. We'll have our staple DXY, right? We're going to talk about the dollar index. We're going to talk about one major. We're going to talk about one fund pair. So we did EU for the major, and we did gold for the fund pair. Again, these kill zone setups that I show you happen consistently. You just have to be patient. Not all of them will be 100% successful. I'm not sitting here telling you that you're going to get the triple confluence premium sell or the triple confluence discount buy, and it's going to be a guarantee winner. No, there are going to be cases where it does lose. Now, for the discussion, I'm just going straight into the nitty gritty and showing you the successful setups. Now, we will show setups where they do fail or setups where the entry isn't triggered and it continues going in the direction that we want it to. We'll throw a few of those in, but I want you to be aware that I'm cutting straight into the answers and showing you the primal setups, right? The setups that did work. With that being said, the next half of this discussion will always go into another topic, and these topics will normally coincide with each other, right? With swing trading, with getting into a trend, how to find the trend, ideas of, breakouts, or finding a way to use the Asian session range. And with that being said, let's jump into the Asian range utilization. Now, many people know me for being a breakout trader or a turtle soup trader, right? Price action breaks one side, and then I fade looking for price action to go the opposite way. Now, for those that don't necessarily trade that way, there is a breakout strategy that you can use utilizing the Asian range. So let's turn on the session indicator. Right, this is the only indicator you should be using, just to indicate your kill zones. So you'll see green is Asian, red is London, blue is New York, and we have other ones as well. Right, the gray zones are all the dead zones we were talking about. Now, you're normally going to see the market consolidate, as you can see clearly in those gray areas. You'll see more of that phase of accumulation. And then we have that yellow, which is London close. And I don't typically trade London close, but we could talk about models with London close as well as we continue the series. Now, with the Asian range, what we are utilizing is either the high or low. And if it breaks the high and we are speculating price action to go higher, we could buy on the breakout or buy on that retest. Vice versa. If we're speculating this new day that we're going into to be a bearish day or a down day, and we see price takes out the Asian low, we can go short on that break or go short on that retest of the Asian low. So, for example, those two Asian model examples that we had Tuesday night and Wednesday night, they were selling off, right, during the Asian session. But going to the next day, you can also see that price action continued that trend. So if we were to go down to the 15-minute chart, just keep it clean, keep it very simple. We come back to this Asian session range. Right, we talked about how Asian session ran up, broke a buy-side liquidity pool, showed you that 1 minute entry above the kill zone opening price and went short. But we're not talking about that here. We're just talking about the Asian session going into the new trading day. So that's the Asian low. This is the Asian high. We're framing this out for you. If for some reason, I don't know what it is, you just speculated, right? Price action is going to go lower. How could we utilize the Asian range? Well, first and foremost, we want price to take out the low. That's a no-brainer, right? We can place a sell stop here. And where should we put our stop loss? We put our stop loss at the Asian high. So we're taking the stance, or we're taking the educated guess that throughout this day, price will not come back up to this high. Now, it's not guaranteed, but you'll see often that the high is protected in that breakout on the Asian low. If that daily candle is going to continue lower, you'll see that price may not run back to the Asian high. There are occurrences where it does. It will run down, run up, and then go short. There are scenarios like that. But there are also scenarios where it breaks the low, continues going lower, retests, and goes short throughout London and New York. Now, how I would frame it, I'm looking for one standard deviation of the Asian session range. So I'll take a fib, try and find that standard deviation. Right? I'm looking for one standard deviation to the downside. So from here to here, that's one standard deviation. So that would be our first TP. Anything on 2 to 1, 1 to 1, 3 to 1, 4 to 1. I'm not looking for that much. I'm just looking for that one movement down lower of that Asian range, and the stop loss is there. So play it forward, see what happens. And then you guys know what happened because we saw that it continued to go short. Right, there's some type of retest multiple times. There's even a retest at the end going into the end of the New York session or going into London close. And London close gives that continuation breakdown with that distribution from New York session. And it runs out. Now, this is one way you can utilize the Asian range. And notice how we didn't talk about a single change in character, 1 minute time frame, fair value gap, breaker, mitigation, volume imbalance, and the list goes on. We didn't talk about a single thing. All we did was just look at the low. You can be the trader that formulates a model in your portfolio just based on breaking out. Just based on that. Do I typically do this? No. Right? I'm being very transparent with you. I would prefer, right, if I was going short this day, I would have preferred price to take out the high and then we look for a short. But we don't get that. Here we end up getting the breakout and price continuing in that direction. And you'll see that same thing, that's this same phenomenon repeated again. Play it forward. Let's go into that Wednesday, going into Thursday. So we got the Wednesday Asian session going into Thursday. We got the Asian high. Correction, this one's the high. And then we got this Asian low down here. If for some reason you're going into this Thursday saying you want price action to go lower, and you're that trader that likes to break out, this is how I would frame it again. Just place that sell stop here. Set it and forget it. Come back around at the end of, London, or set a timer or a schedule for you to check on this periodically to see if you're in profit or not. Stop loss there. We're looking for a standard deviation of 1. Close enough. And that's what we're going to do. Set it, forget it. Now, there's no fair in losing because we're managing our risk. That's the crucial part here, right? My subscribers, the people that I teach, the people that I coach, we know that it is crucial to have great risk protocol. If we lose a trade, we cannot risk the same amount. And we'll talk about risk management during the Forex Fridays as well as one of the segments. But for now, just understand you need to have a risk protocol, have a plan, and play it forward. And it continues to sell off. And that's that breakout idea. Now, this is not perfect every single time because, again, there are scenarios where it does take the low out and comes back to the high. And then it fades lower later into the day. You will see examples like that. Keep this in mind. Everything I'm telling you is based off of experience and me studying the charts constantly. I've seen these charts for the last 7 years. These things repeat over and over and over again. They're not perfect, but the same characteristics and scenarios definitely repeat. It's not 1,000 ways that the market's going to print price action to traders. It's only delivered in a small handful of ways. Once you start to understand that, you're like, oh, wow, there's not so many options and too many scenarios. There's only a few scenarios that this could play out with. Scenario 1 is the breakout that we're showing here. Scenario 2 is the fade, then going in the right direction, right? We convince traders on that Judas swing running up. Maybe London does it, maybe even New York does it, and then it fades later in the day. That's the second scenario. Or the third scenario, it really just doesn't do anything for the day. It goes down, moves sideways, and it's just not the best price action to trade in. And it is what it is. But at the end of the day, you still manage that risk. That's the only thing you can control. You can't control these candles printing. You can't get it right all the time. But you can control that lot size you put down. You can't be out here risking more than 3, 4, 5% per trade, per capital, or per equity. You can't do that because you're going to burn out of funds real quickly. I know this isn't a discussion about risk management, but it's very crucial, and we'll have a discussion about that. Now, when it comes to breaking out, many traders may want the extra, information on what if I wanted to fine tune this entry. We could talk about that in the Discord, right? You have mentorship. We can talk about how to fine tune this if you want to get a better entry or find another retest idea here. But for the general sake for the channel, we're taking that low. We're putting the stop loss up here because we're assuming that stop loss is not going to get hit, or mainly that Asian high is not going to get tagged out. And we're going to bank with momentum to the downside in that breakout there. Let's look back. Right? Just take a look at some other examples. Same thing vice versa too. You see this is different, right? Takes out the low. It doesn't get like, let's say you were speculating price action to go lower here for this day, right? Continue going lower. You would have lost. Stop loss would have been cooked right at that high. It is what it is. But again, risk management is very crucial. You see here again, look at this. Takes out the low, it fades. It continues going lower. You'll see this repeat very often. You got to keep it simple. You don't have to do a whole lot. If we had to take a look at the bullish idea, right? The bullish scenario. This one's a good one here. Just looking at it briefly, right? Just going back and checking out hindsight, right? Hindsight, don't let people get it twisted. People will tell you, oh, hindsight is not good. Backtesting, it is good. Because this is what gives us exposure to get experience. We need to understand how these markets even form and how they produce price to us as a trader. You got to look at it. Don't allow people to confuse you or make you feel like you're not a good trader because you like to go back and check previous ideas or things that already panned out. Because the same things that panned out here in 2025 is going to happen in 2026. And it's going to happen in 2027 and 2028. The algorithm hasn't changed. The entries haven't changed, right? They might have fine-tuned some of the way they provide the liquidity into the market to make liquidity a lot smoother, right? And make certain kill zones a lot better. But they haven't fine-tuned and changed the coding, the ones and the zeros, and how this market works. It hasn't changed. The 4 phases there's not a 5th phase. There's not 10 phases, right? There's consolidation, retracement, expansion, reversal. There's not a special extra 5 or 6 or 7 phase. That's it. And the sooner you start to arrive to that, the quicker you'll start to see it doesn't take much. It really doesn't take much. It's just about catching those strides, finding the ideal days to trade, keeping the ideas simple. Even if you're going a no bias model, you can go a no bias model with this too. I do recommend, especially new traders, take advantage of this. Take advantage of the value that we provide in the channel. I want you to understand I'm here for you. A lot of people have direct access to me, one-on-one coaching, right? That's what I'm going to provide. We're going to provide live trading in the Discord chat. We're going to provide weekly markups, my thoughts and ideas, my top-down analysis. My day-to-day breakdowns will always be on YouTube, right? The pair that we use, and I'll give you a couple of the macros: central bank interest rate differential, seasonal tendencies, higher time frame bias. What is the dollar doing? What are the other correlated or inversely correlated assets doing? We will always bring that to the channel. But for the Discord server, I'm always going to go a mile for you guys. Always. Again, hopefully you found this insightful. My fellow traders, please do not trade with indicators. It is detrimental. I'll say this again. Please do not trade with indicators. It is detrimental to the development of a trader's success. Peace.